Hello everyone, welcome to week 3 of our project Hiring in Montreal, where we'll be looking at LinkedIn job creation data to determine a signal on the health of the job market. Also, it's a month after March 15th, where now we can pull monthly data without bias. This will enable us to look at trend lines with more confidence and determine whether or not we're trending in the right direction. Without further ado, let's get into it and see how the charts will work. The blue line is to show how many jobs were created for that particular day. This line will show great volatility, but this shows us what the short term looks like. The black line represents a 7-day moving average of job creation data. This line will be less volatile and represent the medium term. We will now incorporate a red color representing a 30-day moving average of job creation data. This line will represent the long term. The idea is to now compare the day, how many jobs were created today compared to how many jobs were created on the average of the last week of the jobs that were created on the average of the last month, and see are we higher or lower. To confirm strong growth, we need to see both the blue and the black line over the red line. Now let's look into the data. Here's the Greater Montreal chart. In the last video, the Montreal market looked great. This week, not so much. Last Monday, you'll see the black line decline sharply because it's replacing last week's big gains. For you that are new, the 1,142 jobs created 2 weeks ago were mostly government jobs created to deal with the demand on the resources. That said, even though jobs were created on Wednesday and Thursday, the black line is under the red line, confirming we haven't grown over the monthly average. Since April 4th, we have a moving day average loss of 3.8% and under the monthly average by 11%. Time to look at job types, with full-time employment up first. Due to the majority of jobs on LinkedIn being full-time employment, the chart looks identical to the Greater Montreal market, as does the conclusion. Trend lines prove no confirmed growth and a 2.3% loss since April 4th. And it's also below the red line by 12.3%. So we actually have a lot of work to do here in Montreal. For part-time, this chart gives me a headache. Hopefully this is what will happen to crude oil. I hope you've been following the news regarding this. It's going to have a sharp decline that hits 0 or -40 in oil's case, potato, and then it spikes back up. I know the black line is under the red line. However, I expect it to be passed next week, especially with the full-time positions declining. Until then, the black line suffers a 25% loss and a 10% differential to the monthly average. Contracts. I've been saying this since we started this. When everything hits the fan, contracts are offered as a quick and easy band-aid, especially in Montreal. Best part, the chart shows it. Both the daily and weekly lines are above the monthly average, confirming growth, resulting in a positive differential of 17.6% above the monthly moving average. But sadly, we did suffer a 15% loss on the black line since April 4th. Time to look at the top industries and see which ones are still supporting opportunities. For computer software, we don't have to go over it much as most tech companies are growing. It has a confirmed growth, meaning both the blue and the black lines are over the red line. It also has a positive delta of 11.8% on the monthly average, but sadly the weekly average is declining at a rate of 13%. It's funny, information technology and services doesn't have confirmed growth. I have a feeling it's because people are starting using computer software and IT services simultaneously on job posts to get better visibility on LinkedIn. But this is just an assumption, and I know we're here for data, so let's get back to that. Since April 4th, the weekly moving average was reduced by 10.5%, and a negative delta of 3.1% when comparing it to the monthly average. In the last video, I said that the retail industry is growing, and looking at the graph, it's just there. The weekly average grew 18.9%, and the delta from the monthly moving average is a whopping 0.9% in the negative direction. To quote Senior Chang, I'll allow it. Financial services were on the right path until they had a 5-day lull in the middle of the chart. The weekly average is down 11.4% and the delta of the monthly average is minus 4.7%. However, I expect it to turn shortly due to what I'm hearing from people in the industry. Experience levels are always interesting to look at, especially now that we can incorporate the monthly average. Internships were riding on April 9th's coattails, and the moment the 7-day average lost that day, it fell back to reality, resulting in everything falling back under the monthly moving average. For entry level, I thought we saw great growth last week, until we incorporated the monthly moving average as seen in red. So while the weekly average line in black has a gain of 2.8%, it still falls below the monthly average in red at 7.9%. You don't see it, but the red line is actually at 279, so I know that's a little bit hard on the graph to see. Associate is another variable that was riding another big day 2 weeks ago. Since then, the weekly average dropped by 1.5% for the duration of this analysis, and 30% under the monthly average. This just goes to show you how important the monthly average is to confirm actual trend analysis. The mid-senior level has confirmed growth with both the daily and the weekly averages resting above the monthly average by 6.1%. However, in total, the weekly average did drop by 8.8%. There is still a great opportunity here for senior individual contributors to make that jump for middle management. The weekly moving average for the directors level has grown 21.4% since our analysis has started and has confirmed growth as it rests over the monthly moving average by 13.3%. Another strong opportunity here. For the executive level, the weekly average has grown 50% while simultaneously beating the monthly moving average by 14.3%. While we're looking at it, it seems like companies are hiring new leadership to shift their strategies resulting to COVID-19. This is a great opportunity for young professionals to watch who's getting these new leadership positions and offering how to support them. Thank you for watching this video. If you have any questions, please comment them below. Also, please like our video and subscribe to our channel as we'll be doing this on a weekly basis. As a thank you for watching this video, please find below the top companies and job titles for the Greater Montreal area from April 10th to April 17th.